Tanvi, the rally is coming through today. We're expecting these results to be confirmed on Tuesday. These are just the exit polls, but again, the expectation is they'll be confirmed on Tuesday. We'll see if that comes to pass. What do you make of the market reaction and whether or not it can be sustained from here?
Hi, John. Thank you for having me. I think the exit poll results, the second they came out on the 1st of June, we were already anticipating the markets to kind of take that into consideration today. The second the markets opened, your broader level indices, that is your Nifty and Sensex, rallied by almost 3.5%. This is on the backs of expectation that the BJP-led government is not only expecting to cross the 350 landmark numbers, but it's also itching to, kind of touch the 400 number that we have been talking about. Now, looking back at the election, back in 2019, the BJP-led government kind of touched the 352 numbers, and the markets are kind of anticipating the same kind of rally to happen this time as well. The rally is on the backs of not only a government coming into place, but also the budgetary impact that it's going to have in the broader level markets.
So is this a bet on stability in India, or is this a bet on a reform agenda that is yet to be fully completed?
I think it's a bet on stability, and the fact that the sectors also, on a broader level, the growth sectors that we are looking at, whether it's manufacturing, whether it's industry, whether it's automated electrical vehicles, power, hydraulics, all of these sectors are on a broader level what boosts the economy. In Friday, the last GDP numbers also that came in, they came way above expectations. We saw the GDP numbers kind of cross the 8%. RBI also projecting a 7.5% kind of a fiscal year number. Now, all of these factors are based on the fact that the government is looking at a long-term average with regards to understanding its growth projection in the next 100 days, at least, from the formation of the government. We're expecting your broader level sectors such as your banking sectors, your infrastructure development to kind of take that boost on the backs of the reforms that the current government is providing.
Foreign investors sold about 3.3 billion equivalent of Indian shares in the month of May. Does this bring foreign investors back, or does the valuation concern remain?
Now, I do agree that the Indian markets are fairly overvalued in comparison to its emerging market peers. We are somewhere valued more than 3x in comparison to China. But on a broader level, the markets do seem a bit fair valued as well, because this is a long-term projection. In comparison to our 20-year averages, we are somewhere in line with our long-term average. And also considering the fact that it's a very emerging market space that Indian economy belongs to, on an FII and FDI level, they are there is a certain level of expectation of inflow, outflow happening on the backs of your emerging market movement from Indian economy to the Chinese economy. But on a broader level, we do expect DIIs to kind of stay stable, to continue the inflow that it's currently at, to cross the 20,000 monthly SIP inflow that it's having. So even though there is a certain level of traction with regards to net exits on an FII, FDI space, we do believe the long-term reforms that the government has currently in place will ensure that the long-term stickiness of FDI inflows will come back into the Indian economy.
OK, interesting. You touched on this in terms of the fiscal changes, or at least the importance of scrutinising the fiscal story in India. What is the fiscal impulse likely to look like in the months and quarters ahead for India? And how do you align? How do you position around that story?
So we're looking at sectorial growth. We are looking at private investments, consumption-driven economy. So on a sectorial growth, we are looking at manufacturing sector having, a robust growth. So we saw about 11.64% on a year-on-year growth in terms of manufacturing and sector. Allied on construction basis, the private investment and government spending is again expected to be on an all-time high, with the government very clearly focusing on private investments. Your infrastructure and emerging markets are also looking to have an increased allocation into renewable energy. Your domestic demands and consumption somewhere has seen an all-time high. We're looking at equity market inflows kind of touching an all-time high, also because of increased participation by retail investors. So on a broader level, on a global standing as well, we are extremely positive. We did see the Indian markets, that is your Sensex, kind of cross the 5 trillion mark as well in terms of market cap. So looking at this broader level, we are kind of positive on the confidence in terms of the economic prospect that India currently holds.